Which Nasdaq listed company has Ranveer Singh and Alia Bhatt as its brand ambassadors?
Make My Trip.
That's correct. A popular Hindi song from the 70s starring Shami Kapoor shares its name with which US company?
Blank.
Yahoo! Chahe koi mujhe jangli kahe. The world's most expensive stock costs over 5 crore rupees. Can you name that?
Berkshire Hathaway.
That's correct. The name of which tech company is inspired from the Latin for envy?
Oh, Nvidia.
That's correct. If you had invested 1 lakh rupees in this company 20 years ago, you would have been sitting on probably 7 crores today.
It's one of the FANGs. Apple, Facebook, one of them.
Apple it is. Which semiconductor stock has given 439% gains in the last 1 year itself? More than double of Nvidia.
Not sure.
That's Supermicro. Which e-commerce giant makes maximum profits outside of e-commerce?
Amazon?
That's correct. AWS being its cloud computing and profit spinner. Which company has paid Michael Jordan over $1 billion in royalty?
Nike.
That's correct.
As Google and Facebook grow, their market value in the US grows thanks to billions of people in India and other countries logging onto them. Portfolios have typically given close to 2x returns of what the index has.
As an Indian investor, why should I even invest in the US? Hello everyone, I'm Ravi Handa and I'd like to welcome you to Desi Fire podcast. A couple of days ago, I wrote on social media about how investing in US is a good idea. And I actually did that because I found a platform called Appreciate, which helps people in India invest in the US. Somehow that post reached the Appreciate team, and today I'm lucky to have Subho with us, who is the founder and CEO of Appreciate. Welcome, Subho. Welcome to the show.
Hi, Ravi. Nice to be here.
So I'll jump straight into it and start with a very, very basic question. As an Indian investor, why should I even invest in the US?
So, Ravi, two reasons, right? One is that I think the US is one of the deepest capital markets there is in the world today. And historically, the returns that you get, especially when you adjust for currency appreciation, are quite robust. Second is that if you're already an Indian investor investing in India, you want to diversify your risks away. And so typically taking 20-30% of your traditional investment per month and moving it to the US gives you significant diversification benefits. So one, of course, the actual return, and two, risk-adjusted returns are typically much better if you diversify.
The idea is the growth of a country would essentially be reflected in the growth of the stock market. The US GDP, although growing, probably grows at 2%, and 3% is considered very, very nice growth for a GDP like the US. But India, I don't know at what rate India is going to grow, maybe 7%, maybe 8%, maybe 6% in the next decade. But nearly everyone would agree that the growth rate in India is going to be much higher than the growth rate in the US. So why not stick to a developing economy versus a developed one?
Yeah, that's because you're not investing in the country. Who are the two software companies that have the largest software platforms that are currently being used by consumers today? One is Facebook, the other one is Google. They're both listed in the US. As Google and Facebook grow, their market value in the US grows thanks to billions of people in India and other countries logging onto them. You're not making a country bet. You're making a company bet. And the companies that you want to bet on are largely listed in the US stock market.
Fair. So Subho, you talked about how you are democratizing investing, but you are a business, you need to make money. So what is the fee at the Appreciate platform? Let's say for remittance, what it is that you're charging, and what are the other fee involved?
Yeah, so we have zero subscriptions, so no subscriptions whatsoever. We have a zero remittance fee, so there is no fixed fee for remittance at all. And we have zero withdrawal fees, so it's your money. When you bring it back, we should not charge you anything for it at all. right? Now, having said that, like you said, we're a business, right? So we obviously have to charge something. So we charge a 0.05% fee on transactions. And that too, typically, depending on how many transactions you do, etc., we introduce offers where we waive that, right? For high frequency traders. And by the way, we also offer caps so that beyond the point, right? In a given week, in a given month, if you hit caps, we also then stop those fees. The whole point of what we do is to make sure that people can come in and experience the US market. And we want more and more people to come in and become US investors. So our business works on scale, right? So the more we do that, the better it is.
Oh, fair enough. But when you talk about democratizing investment, you'll have people coming in with very small amount of money to invest. How would they even decide that whether they need to invest in company X or company Y? Does Appreciate help users with that?
We do. So we have a proprietary AI ML model that actually looks at all US traded equities. And we have what's called in technical terms an efficient frontier-based model that basically evaluates stocks and evaluates combination of stocks. So one way users can invest on our app is through preset portfolios we have, right? And these portfolios have typically given close to 2x returns of what the index has. If you want tips, then you're like, no, I'll make my own decisions. The same model also throws out what are the top recommended stocks in a given week to invest in, given sort of the momentum of the stock and the historical return and where it's going. So ultimately, we don't, tell you that, hey, if you invest here, here's a short return you can get, because no one can predict the market. But we do have a fair amount of AI technical analysis that gives you a set of recommendations so that when you come in, you can say, great, here are 10 picks I can choose from. Then the person can decide, or if they truly want to, fill it, shut it, forget it, right? Like the old scooter ad. Then they can go to a preset portfolio and say, great, I'll put my money in. The portfolio is managed, it gets rebalanced. All of that is done for you. So either option is available.
So that's what the platform does. What about you? How does Subho manage his US portfolio?
So, my US portfolio, I've been investing in the index for a while. I tend to monitor stocks and macroeconomic situations and then make macro and sectoral bets. For example, I got into Nvidia and Microsoft and Amazon in a big way 9 months ago. Those stocks have done pretty well because I believe that there would be an AI hype that fueled them. So I typically, do my own analysis, but of course, increasing now, we're also building up, a financial analysis capacity and capability within Appreciate. So, most of my time now goes towards the business, and I now rely on what Appreciate tells me to invest in.
That's great to hear, Subho. And with that, I think I'd like to wrap up and not take too much of your time. Thanks a lot for joining me, Subho. It has been a pleasure chatting with you, and I hope we will be able to do this again sometime soon.
Of course, Ravi. Thanks so much. Lovely being on your podcast, and look forward to chatting again.
Thanks for being here. And everyone who's watching, please remember to like, share, and subscribe.